breakout trading. So I will be starting now, right? So I think the time is 6:59. So I will record this session as well, right, for everyone to actually see that. So for anyone who doesn't catch the entire session, right, we will be able to go through to the recording. I'll upload that so everyone can have that. So today, as I said, we're following on from our previous 3 sessions that we did regarding breakout trading. All right. So I think our main objective with breakout trading has been, for the focus with our breakout trading for the past 3 weeks, has been more or less to sort of like get an understanding of how to properly trade a breakout, because a lot of guys have attempted to trade breakouts because it's a very simple way of looking at market. So I would think that everyone would like a very simplified approach to how the markets work. Okay. So breakout methodologies actually work very well if executed properly. Okay. All right. So should you guys have any questions during the course of the session, just shoot your hand up, right? Just raise your hand or just type your question and I will unmute your mic. Okay. And once your mic is unmuted, then you'll be able to speak. Okay. Right. Because the thing is, I think I've explained this over a million times already. When we have too many people attending the session, right, as we normally do, then there's a lot of background noises. So once we unmute everyone, then it's just going to be chaos and the recording won't be audible at all. Okay. So we're just going to use today's example. We did look at the GBP JPY yesterday. Okay, if you guys look closely, we did finally get that 130.74 level. So if you were at last night's session, you will remember that we were looking at shorting. Well, we did short somewhere around this 33 even level. Okay, so 33 even. We did get a really good opportunity to actually go short, and another one came in at 32.50, which I think that's where most of the guys came in, right? And we're anticipating a drop or continuation of drop to 137.450. If you watch last night's video, you'll see that that is where we were hoping the market actually extends to. Right now, you can see that on the Fibonacci, right, on the extension, using the extension tool, we have a 61, right, a 261.8% extension, right? So the market extended 261% in total of that actual move. So what does that really mean? Okay, now if you're looking at the actual trade setup itself, right, now what we looked at in terms of sort of like icing on the cake for this setup. Okay, just give me a minute, guys, to make sure that. All right, just trying to make sure that everyone is logged in. Okay, so looking at the markets in terms of just getting the necessary information from the candlestick formations themselves, okay, of which we actually did have here, right? So you can see that 132.50 level, right? It actually held up pretty nicely. Let me just grab my drawing tool over here. Hopefully you guys can see it. Boom, right? That 132.50 level, okay? It was a nice previous support structure. Boom, market broke below it and came back in, right? Took a swing again at 131.50, okay? And popped right above 132 even, boom, and then came back down to 130.50. Okay, obviously we did place our targets a bit closer than 130.50 because the market does have a tendency of pulling back just before those big figures, the round numbers. Okay, so you don't want to be caught in a scenario where you had all this profit running from this particular trade setup. Okay, and all of a sudden now the market moves and then 5 pips from the take profit, something like reverses aggressively and comes back to hit that level. Because a lot of you guys would have sort of like broken even at that zone or that level. So it would have really Okay. Can you hear me now? Is the audio better now? Yes, no? Okay, I'm not sure what's going on, guys. Okay, hopefully everyone can hear me. The audio is good. Because I think on my side, it's supposed to be fine. Just inserted this other mic in here, so it should be working fine. All right. So if, for example, then we're using a rejection candle as our confirmation, we'd like to see something with a bit of length on the other side. Okay, so if we're expecting or anticipating a downward trend, right, or a rejection at this point, okay, boom, this point, 13150, then what we'd like to see is this type of candle form somewhere around here. Okay, so that would be the only thing that would stop us or that would deter us from just taking the short as soon as it hits that 13150 zone. Okay. So as soon as the market hits 13150, there's a few more things that actually need to come together in order for us to verify that we have a high probability trade setup. Okay. Now, one of the tools that we can use, okay, in order for us to verify that would obviously be the Fibonacci, right? So if you throw in the Fib from this swing low through to the swing, from this swing high rather, from this high point over here, through to this swing low, boom, okay? Then we have our 50 to 62% Fibonacci retracement. Okay. Right, guys, I am recording this, so if you're having issues with audio, then just yeah, just be patient. Once we're done with the session, I'll upload it. You should be able to watch it tonight. So if it's in and out, fading in and out, just let me know. It might be an issue on my side. I'm not quite sure, but if it's an issue on your side, you'll be able to get the recording, so you can just watch that actually. Okay. So okay, let me remove this one here because I'm sorry guys, I might get confused by that. Right, so we have this swing high here, boom. Right, so we have this swing high over here, and we have this swing low there, boom, right? So swing high, swing low, right? The percent of the retracement is 50 to 62%. Okay, so that's one of the things that we'd like to have, a 50 to 62% Fibonacci retracement. Right, so there's something else that we hadn't seen before. Okay, so Fibonacci retracement, right, into the Fib zone. That's one thing, right? Previous market structure, right? That's the second thing. The third thing would be the round number, right? You can see it's right on 131.50. Okay. Now, let's say fourth or fifth thing that we'd like to see is one of the moving averages, whether we're working with the 200 moving average or the 800 moving average, but on the lower time frames, you'll probably see the moving average moving or hovering around that area over there. Okay, so you might get a pin or a bounce off that moving average, right? So something along these lines, market pulls up, right? The moving average obviously continues to move downwards like that, and the market or the candlestick that actually forms a reversal will sometimes, in a lot of times rather, bounce off this moving average. Okay, something along these lines. So if you're looking at this on the 30-minute time frame, we had one candle going up, right? As we discussed in, it was 2 sessions ago, a lot of traders will use the moving averages as support and resistance, and therefore, right, therefore, that will give us added advantage because now we know that there are traders going long right above this moving average. Okay, so there's a lot of reason for the market to turn back to the downside and continue on the downward trend. Okay, right, so that's the main reason why you get these sort of bounces on the 200 moving average or on the 800 moving average. Okay, the last two sessions ago, we did all of that. And I do believe that there's a video up for that, so you just have to go and watch that. Likewise with the Fibonacci. But you can see we have a lot of things coming together. So this is a definition of what a high probability trade setup would actually look like. Now, when trading a breakout, the one and most important thing that you have to do is wait for confirmation. Right. The only thing that I'd be expecting now is a pin bar, right, or some sort of a rejection candle around 131.50 and an extension continuation move to the downside. Okay. Now, once, let's say you've gotten into the trade itself, right? So let's say the market plays out the way that we've been expecting it to, right? So let's say the market gifts us a really good entry, right? Now, what will be next is obviously for you to figure out where you're going to get out. Okay, so you throw on your fib like you should know from that swing low through to the swing high of where the actual entry is going to be. Right, so let me just highlight the route it's going to take. Right, so from there to there, boom, and continuation down. So what's then going to happen is the market will come up, boom, get that rejection candle, pin bar, right? Something aggressive, and then the market will pull way to the downside. Now, what we'd like to see the market do is extend at least to that 1618% of the retracement. Why? Because this then starts to give us a really good risk reward ratio. So when you start to trade like that, that's when you get a really good risk reward ratio, right? It might not be the best right now, okay? Because that's not what we're looking for. We're not looking for the very best right now. We're looking for mainly consistency. Okay, so your risk reward might be 1:3. So if your stop loss is 50 pips, okay, so let's say the stop loss is 50 pips on this type of trade, boom, at 31 or 32 even, okay, we have a take profit of about, this is over 150 pips. So this is like, yeah, 170 pips. So that's like 50 pips, risking 50 pips to make 150 pips on the trade. Okay, so that's 1:3. So that is the reason why we'd rather use the extension tool to find out where our potential take profit target is. Now, sometimes we do go a bit extreme and just head for that 261.8 level. Okay, so sometimes we're like, okay, the 1618 is too close to us, and we'd like to head off to that 261%. So that's where the target will actually be, at 261%. And that is about, from there to there, that's about 270 pips to 300 pips. Okay, that's obviously an even better risk reward ratio. So risking 50 pips to make 300 pips. All right. Now that will come with time, right? Taking off profits or averaging out and averaging in when you have to are skills that we are going to develop as time goes by. But for now, it's just about understanding how simplistic and basic we can get our trading, right? And then once we've got that sort of like hang of things, that consistency in doing things, then we can start doing all the fancy stuff where you like having multiple orders in, taking some off the table and all that other fancy trade management stuff. But at the moment, the most fundamental thing is to have consistency, right? So consistent results usually comes from consistent processes. So you have to do more or less the same thing each and every single day. And with your trade setup as well, you need to be looking for more or less the same thing each and every single day. Otherwise, you'll have erratic results. And that's what really demotivates a lot of people. Like, you have incredible performance this week, and then next week you lose your mind. Obviously, I'd also be a bit demotivated by that because it will suggest to you that you don't know what you're doing, right? So we'll master that. No need to worry too much about that. We'll get into what processes we need to focus on, what are the things we need to do on a day-to-day basis. That's actually going to get us to a point where we have this sense of consistency within our trading, right? Because the strategy itself can be great, can be incredible, can make money. But if the trader himself or herself is not at the same level as whatever strategy that they're actually using, it's going to be redundant. It's going to be quite useless for them because they'll always have these minor mistakes, right? They won't execute, they'll hesitate, right? A lot of guys do that, they'll hesitate. And one trade, they lose 3 trades in a row, 4 trades in a row, and then all of a sudden they go big, right? That's when they go home, or they go 3 or 4 trades losing, right? 3 or 4 losing trades, and then all of a sudden a really good trade setup develops, like this perfect trade setup develops, but they're too scared to go in with the regular lot size, right? So they use a very small lot size because they've been losing trades past 2 or 3 trades, and now they just want to secure profits, right? But it's really just a form of being afraid of the market. So we're going to deal with all of that stuff, but as is, right? Yeah, as is. Does everyone understand how to spot a breakout, right? So when it comes to spotting a breakout, or at least firstly a support structure, we all on the same page regarding that. Because the first step is obviously to have a support structure or a resistance structure that we can clearly identify that is in line with the trend, right? So if the market is going down, you're looking at support structure. If the market is going up, you're looking at resistance structure. Now, the overall trend in the GBP JPY, as I said, we are still fundamentally short. Therefore, we're looking at these bounces of one of these round big figures, market moving away, breaking down below, coming back to retest, right? Because that's where traders were shorting before. So it makes sense that that would be an area that the traders will be selling again. Okay. All right. Guys, have any questions? Okay, so what we can do is, I have recorded this, okay, of the basic, more of the basic stuff when it comes to the new guys, right? All right, guys, so if there are no other questions, I'll be ending off tonight's session here. I will see the beginnings tomorrow, 7 p.m. Right, so new guys, see you guys tomorrow, 7 p.m. And the next advanced class is going to be on Thursday, same time, 7 p.m. I'll be uploading a few stuff probably during the course of the evening for you guys to go over. One of them is actual tools that you can need, right? So the one that we've been talking about right now. So I'll just upload that on the Telegram channel as well. If you're on the WhatsApp group, just make sure you download Telegram and you go through to the Telegram channel because we're going to be closing the WhatsApp group soon. Okay. All right, guys. Hope you guys enjoy the rest of the evening and cheers.